Welcome to the deep dive. Today we're going to be tackling something kind of big, I guess you could say, the psychology of money.
Oh, yeah.
You've sent us some great material on this, including those interesting pieces from Morgan Housel's book and
Right.
that analysis from the Swedish investor.
Yeah.
So get ready to explore how uh, getting to know your own mind, like really well,
Yeah.
can make you a much smarter investor.
It really is fascinating how our emotions and biases can have such a big impact on the decisions that we make about money.
Right.
And sometimes we don't even realize it's happening.
Yeah, that's true. Okay, let's jump right in.
Okay.
The materials start off by using this idea of a price of admission.
Mm-hmm.
It's like, imagine you're standing there at the entrance to like a really cool amusement park.
Right.
And, it's going to cost you.
You got to pay to play.
Right.
Yeah.
Yeah, exactly. To get in and enjoy all those rides.
Exactly. And, just like the different rides have, like different thrills.
Right.
Different intensities, different investment strategies have different levels of risk and potential reward.
They use the example of concentrated investing.
Mm-hmm.
They're saying if you want to get those like really high returns, the price you might have to pay is volatility.
Right.
Which basically means
Big swings.
yeah, big swings. Your investments could shoot way up, but they could also plummet like way down.
Totally. And they even use Netflix as an example in the material.
Yeah, Netflix
Yeah.
is a good one.
Yeah. Their stock has just skyrocketed, over the years.
Mm-hmm.
But it's also had these like wild, crazy swings. Like think back to 2011.
Oh, wow.
Their stock crashed almost 80%.
Oof.
Could you have stomping that kind of drop? I mean, that's the question that every investor needs to be asking themselves. Right.
Yeah, I mean, that's a pretty big drop.
Yeah.
And it's not just those like high gross companies like Netflix.
Right.
Even the S&P 500, which is considered a much more stable investment.
Yeah.
It's seen some pretty significant declines.
It has, like during the 2008 financial crisis,
Oh, right.
it dropped over 50%.
Oof, talk about a roller coaster.
It is a roller coaster. So the key takeaway here, I think, is that there's really no such thing as a free lunch when it comes to investing.
Right.
Every strategy has a price tag, right?
Yeah.
And before you jump in,
Yeah.
you really got to make sure that you are comfortable with the potential cost.
So you mean like before you even start thinking about like picking stocks or mutual funds or whatever,
Right.
you've got to understand your own risk tolerance.
Precisely. Yeah. If you're someone who tends to, panic easily when your investments go down,
Yeah.
maybe chasing those super high returns isn't the best approach for you.
Okay, that makes sense.
Maybe a more balanced, diversified approach
Right.
would be a better fit.
Makes sense. Okay, so now let's talk about something I know all of us have experienced at some point, right?
For sure.
The envy trap. The material points out how, capitalism is like this machine.
Mm.
It creates wealth, but it also like breeds envy.
Right.
Like it's like this constant game of comparison.
It is. Yeah. You get a raise, you're happy
Right.
for a hot minute,
Yeah, yeah.
and then you find out your coworker got a bigger one, and suddenly
Right?
all that joy just,
It evaporates.
it's gone. Yeah.
Yeah.
Poof.
It's like that old saying, comparison is the thief of joy.
That's a good one. That's a good one.
Yeah.
They give a good example in the materials, actually.
Yeah.
Imagine you're a doctor doing pretty well for yourself,
Mhm.
making a good living.
Right.
But then you look over and your neighbor is a CEO
Oh, no.
pulling in way more cash than you are.
Oh, yeah.
And then that CEO knows a billionaire,
It's like never ends.
Yeah, there's always someone
Yeah.
higher up on the ladder,
Right.
making us feel like we're not doing enough.
And that feeling, I mean, I know for me that can lead to some pretty bad decisions.
Absolutely. Yeah, I think about it. People taking risky gambles
Mm-hmm.
to try and catch up, relationships falling apart because of financial stress,
Oh, yeah.
illegal activities even,
Wow.
driven by greed and envy.
How do we get out of that trap then?
Well, the key they highlight in the materials is defining what enough means for you,
Right.
not based on what other people have
Right.
or what society is telling you should want, right?
Yeah.
But what truly brings you happiness and a sense of security.
I like that. I like that a lot. Yeah. So much of our financial like anxiety just comes from comparing ourselves to others
Right.
instead of just like focusing on what our own goals are,
Exactly.
our own values.
Mm.
Okay. This next point was also really interesting to me. This
Yeah.
idea that perspective is everything.
Yeah, it's a good one.
Remember that example they give about lottery tickets?
I do. Yeah.
Low-income households spending a big chunk of their money
Yeah.
on lottery tickets.
It's easy to look at that and be like, that's so irrational.
Right. They should be saving that money.
They should be investing. Yeah.
They should be investing it. Yeah, exactly.
Right.
But, the material challenge is to see it from their perspective.
It does. Yeah.
Yeah.
For someone who's, really struggling to make ends meet,
Yeah.
that lottery ticket might represent their only shot at achieving a dream.
Right, right.
Or participating in a system that feels rigged against them. You know what I mean?
So what seems totally crazy to one person
Right.
could be completely logical to another person.
Totally, yeah.
Depending on their experiences and circumstances.
Based on their own lived experience.
Right, right.
Exactly.
And that's a super crucial thing to keep in mind when it comes to investing, right?
Totally. Yeah, just because some investment strategy
Uh-huh.
worked for someone else
Right.
doesn't mean it's the right fit for you.
Yeah, yeah.
At all.
It's a good reminder that we all have different goals.
We do.
Different risk tolerances.
Yeah.
Different levels of financial knowledge, right?
Absolutely. Before you jump into any investment, you need to really understand your own financial situation, your own goals, and make sure that the strategy that you're choosing really aligns with your needs.
Okay, so we've talked about the importance of knowing your risk tolerance and avoiding that comparison crap.
Right.
But what about those big, unpredictable events that can just totally throw a wrench in even the best laid plans? You know what I mean?
Yeah, you're talking about those black swan events.
Yeah.
Highly improbable occurrences, but when they happen, they have a massive impact.
The material mentions some really big ones.
Yeah.
The Great Depression, World War II, even the COVID-19 pandemic.
Right. Those are things that no one could have predicted.
Right.
But they have huge consequences for the entire global economy.
So if we can't predict them, how do we prepare for them?
Well, the material emphasizes this idea of preparedness.
Okay.
It's not about, trying to time the market perfectly.
Right.
Or foresee the unpredictable.
Right.
It's about building resilience.
Okay, so they talk about having an emergency fund.
Right. Yeah, so that you have a cushion to fall back on if, you lose your job or have an unexpected expense.
Right, right.
And diversifying your investments so you're not putting all your eggs in one basket.
And I think maybe the most important thing is cultivating the mental fortitude to weather the storm.
A good one, yeah.
They mention how some people panic and sell all their investments during a downturn.
Right.
And then they totally miss out on the rebound, right?
Exactly. So sometimes the best course of action is to, stay calm, stick to your long-term plan, and just ride out the volatility.
Okay, so preparedness is not just about having the money, but it's also about having the right mindset.
It's about having the resources and the mindset.
Okay, on to our last point for this part of the deep dive.
Okay.
We've all met that person, who just loves to predict doom and gloom, right?
Oh, yeah.
The material calls this the seduction of pessimism.
The seduction of pessimism.
Yeah, why are we so drawn to it?
Well, they explain that it's partly evolutionary. Our brains are wired to pay way more attention to threats than to opportunities.
Right, right.
It's a survival mechanism.
Makes sense. Back in the caveman days.
Right.
If you didn't notice that saber-toothed tiger hiding in the bushes.
Yeah, you weren't going to last very long.
You were done for, yeah.
But, on top of that, bad news sells. Right?
That's crazy.
It's way more dramatic.
Yeah, yeah.
Way more captivating than stories of slow, steady progress.
Right. We're almost hardwired for negativity.
It seems like it.
Yeah.
So how do we break free from this bias then?
Yeah, that's the question.
Well, the key is recognizing that pessimism can actually be a self-fulfilling prophecy.
Oh, wow.
If you're constantly focused on the negative, you might miss out on opportunities or make decisions based on fear.
So we need to be aware of our own negativity bias and actively look for balanced information, right?
Don't let pessimism paralyze you.
Yeah, yeah.
Be aware of the risks, but also be open to the possibilities.
Okay, that's a lot to digest.
Yeah.
But I think it's already really clear that understanding the psychology of money is just as important as understanding the markets themselves.
I think it's incredibly insightful. Yeah.
Yeah?
It's easy to get caught up in the, technical stuff of investing.
Yeah.
But ultimately, it's our behavior and our mindset that determine our success.
Absolutely. And understanding those psychological factors can help us make smarter decisions,
Totally.
more rational decisions, and ultimately build a more secure financial future.
Absolutely.
But we've got more to unpack.
We do.
Let's take a moment to gather our thoughts.
Okay.
We'll be back soon to explore even more fascinating insights from this deep dive.
Sounds good. Welcome back. It's amazing to see how these psychological principles we've been talking about can actually play out in real life.
Yeah.
The material highlights the story of Ronald Reed,
Oh,
the
yeah.
janitor who amassed millions.
Ronald Reed, yeah.
Yeah.
What an inspiring example, right?
It is.
He shows us that you don't have to be like some Wall Street hotshot
Right.
or have this like secret formula
Yeah.
to build wealth.
Exactly. He lived a very modest life, didn't chase luxury or anything,
Right?
just consistently saved and invested over decades.
They say he let the power of compounding work its magic, right?
Precisely. Compounding is this incredible force
Yeah.
where your returns start generating their own returns,
Right.
leading to exponential growth over time.
It's like,
A snowball rolling downhill,
yeah.
getting bigger and bigger.
So even small, consistent investments can add up to a significant amount over time.
Can.
Especially if you start early.
Especially if you start early.
Yeah.
And it's not just about the numbers,
Right.
It's about developing those right habits and mindset.
Yeah.
Ronald Reed's story shows us that discipline and patience are more valuable than any get-rich-quick scheme.
So it's not about like finding the hottest stock or
No.
timing the market perfectly.
It's about consistently putting money away,
Right.
even if it's a small amount, and letting time do its work.
This brings us back to that concept of enough
Right.
that we talked about earlier.
Ronald Reed clearly understood that
Yeah.
he wasn't trying to keep up with the Joneses
Right.
or impress anybody.
He defined success on his own terms.
He did.
And ultimately, he achieved financial security and the freedom to live the life he wanted.
That's right.
It's a powerful reminder that, true wealth isn't about flashy cars or designer clothes.
Right.
It's about peace of mind,
Mhm.
having options, and the ability to pursue your passions.
Aligning your financial behavior with your values and your goals.
Now, speaking of aligning, let's go back to that idea of the price of admission in investing.
Okay?
Remember, we talk about volatility being like the fee you pay
Yeah.
for the potential of higher returns.
Right, like you're joining a club, right?
Yeah,
The
yeah.
higher the potential rewards,
Yeah.
the higher that membership fee is going to be.
And sometimes those fees can feel really steep,
Oh, yeah,
especially when you see your portfolio like dropping.
absolutely.
Yeah.
Yeah, the market,
Yeah.
it doesn't move in a straight line.
No.
There are going to be ups and downs.
Right.
And how you react to those fluctuations
Yeah.
is going to have a huge impact on your long-term success.
So how do we handle those like inevitable dips
Yeah.
without making like rash decisions?
That's where understanding your own psychology
Yeah.
really comes into play.
Can you handle like watching your investments lose value
Right.
without panicking and selling everything?
It's tough.
Yeah.
Can you ride out the storm?
Yeah.
Knowing that market downturns are just a natural part of the cycle.
That's easier said than done though, right?
It is. Our instincts often tell us to run for the hills when things get scary.
Yeah.
But reacting emotionally can lead to some really costly mistakes.
Think about it. If you sell all your investments when the market's down,
Right.
you're basically locking in those losses, right?
Yeah.
And then when the market rebounds,
You've missed out
you've missed out on the whole thing.
on the recovery.
Ouch.
Yeah.
That's got to hurt.
It does.
So having a plan and sticking to it,
Mm-hmm.
even when it's uncomfortable,
Right.
is really key.
Exactly. That's why it's so important to have a long-term investment strategy
Yeah.
that you believe in.
Right.
That aligns with your risk tolerance and your financial goals.
And it's about having the discipline to like stay the course even when things are, a little turbulent.
Even when things get a little rocky.
Yeah.
Now, on the other side of the coin, the material also cautions us against letting envy drive our financial decisions.
Oh, yeah.
You see someone else bragging about their stock market wins, or they buy a fancy new car, and suddenly you feel this pressure to keep up.
Oh, yeah, that keeping up with the Joneses mentality.
It's dangerous.
It can be really dangerous.
Yeah,
It's like financial FOMO, right?
it is. The fear of missing out.
Yeah.
And that fear can lead to some really impulsive decisions that we later regret.
Right.
We might chase those risky investments,
Yeah.
take out more debt than we can handle,
Mm-hmm.
all because we're trying to keep up with somebody else's lifestyle.
And it's a never-ending cycle, right?
Yeah.
There's always going to be someone who has more, someone who's doing better,
Right.
at least on the surface.
And that's why it's so important to define your own version of success.
Yeah.
What truly matters to you? What brings you happiness? What brings you fulfillment?
It's about focusing on your own journey, right?
It is, yeah.
Not somebody else's.
And recognizing that what might look like success from the outside
Mm-hmm.
might not be fulfilling at all.
This leads us back to the importance of perspective, right?
Buds, yeah.
Remember that example about lottery tickets?
Yeah,
What seems irrational to one person
right.
might make perfect sense to another, right?
Totally.
Given their own circumstances and beliefs.
It's a good reminder to approach financial decisions with empathy
Mm-hmm.
and understanding.
Yeah, we all have different experiences, different goals, different values.
And those differences are going to shape our financial choices.
They do, yeah. So how do we take all this knowledge, right, and apply it to our own lives?
Yeah, that's the big question.
How do we become more aware of our own psychological biases and make better financial decisions?
Right.
How do we find that balance between taking calculated risks and avoiding those like impulsive moves?
I'm guessing the last part of this deep dive is going to help us answer those questions.
Yeah.
We'll explore some practical strategies and insights
Okay.
to help you become a more mindful and successful investor.
I like it.
Stay tuned.
Okay, we're back, ready to wrap up this deep dive into the fascinating world of money psychology.
Mm-hmm.
We've covered some really important ground here.
Yes.
We talked about that price of admission for investing,
Nice.
the ever-present envy trap.
Oh, yeah.
The power of perspective, those unpredictable black swan
Yeah,
events.
right.
And how our brains are practically wired for pessimism.
Yeah, we've covered a lot.
It's a lot to think about.
It is.
But now let's shift gears a bit and focus on, like, what we can actually do with all this knowledge, right?
Okay, yeah.
How can we actually apply these insights to our own lives, make better financial decisions,
Right.
and ultimately achieve a greater sense of, like, financial well-being?
That's the goal, right?
That's the goal, yeah.
So where do we begin?
Yeah, great question.
Well, I think first and foremost, we need to acknowledge just how powerful our emotions really are.
Mm-hmm.
We often like to think of ourselves as rational beings.
Right.
But when it comes to money, our emotions can really hijack our thinking.
Oh, absolutely. Fear, greed, and then excitement. I mean, these feelings can really drive us to make some pretty impulsive choices.
They do. And then
Or
later,
we regret.
we regret them, right?
Yeah.
So step one is really just becoming aware of those emotions. When you're about to make a financial decision, just pause for a second and ask yourself, what am I feeling right now?
Right.
Is this fear talking, or am I making a rational decision here?
It's like shining a light on those emotions so they lose their power over us.
Exactly. Bring them out into the open.
Yeah.
And once you're aware of them, you can start to manage them more effectively.
Mm.
You could develop strategies to avoid those knee-jerk reactions, like setting a cooling-off period before you make a big purchase.
Right.
Or talking it over with, a financial advisor that you trust.
Makes sense. And speaking of managing emotions, we talked about that envy trap earlier.
Oh, yeah, the comparison game.
How do we stop constantly comparing ourselves to others and feeling like we're never enough?
That's a tough one.
Yeah.
I think it comes down to defining what enough means for you, not for your neighbor,
Right.
not for anybody else.
Yeah.
What are your values? What are your goals? What truly brings you happiness and fulfillment?
This all goes back to the importance of perspective, right?
It does.
What might look like success from the outside
Right.
might not be fulfilling at all.
Exactly.
So instead of chasing someone else's idea of success, we should really be focused on creating our own.
I agree. And remember, comparison is a thief of joy.
Yeah.
When you're focused on what other people have,
Yeah.
you're taking your attention away from what you do have and what you should be grateful for.
Yeah. Gratitude is a powerful thing,
It is.
It's like the antidote to envy.
Absolutely.
Now, shifting gears a bit, when we're talking about investing, we discussed having a plan, being prepared for those ups and downs in the market.
Right.
What are some practical steps that people can take to, build that resilience?
Yeah. Well, having an emergency fund is crucial.
Right.
It's your safety net. So you're not forced to make those rash financial decisions if you lose your job or have an unexpected expense.
Right.
Aim for at least 3 to 6 months worth of living expenses
Okay.
in an account that you can access easily.
And then when it comes to investing, diversification, right?
Absolutely. Don't put all your eggs in one basket.
Don't put them all in one basket. Yeah.
Spread your investments across different asset classes like stocks, bonds, real estate
Okay.
to reduce your overall risk.
And, investing's a long game.
Long game?
You got to be in it for the long game,
Yeah.
right?
Yeah,
Don't get spooked by those short-term market fluctuations.
exactly. Stay focused on your long-term goals.
Mm-hmm.
And just stick to your plan even when, things get a little bumpy.
Right. And finally, let's not forget about that seduction of pessimism,
Oh, yeah.
How do we avoid getting caught up in all the doom and gloom
Right.
and making decisions out of fear?
Well, I think it's important to be mindful of the information that you're consuming.
Mm-hmm.
It's really easy to get bombarded with negative news all the time.
Oh,
So
yeah.
make a conscious effort to seek out those balanced perspectives.
And remember, progress is often slow and steady, right?
It is,
Don't let the lack of flashy headlines fool you.
right?
There's a lot of good happening in the world.
Absolutely. Focus on what you can control, make informed decisions, and don't let fear be the driver.
I like that. I like that a lot. So to wrap things up, it sounds like the key takeaway here is that understanding your own psychology, your own mind,
Yeah,
is just as important as understanding the markets themselves.
I completely agree.
You
Yeah.
know, by becoming aware of your own biases, managing your emotions, developing a sound investment strategy,
Mm,
you can really set yourself up for financial success.
you
But
can.
more importantly, I think achieve a greater sense of peace of mind
Absolutely.
and just overall financial well-being, right?
That's what it's all about.
That's what it's all about. Yeah.
Money is a tool that
Mm-hmm.
can help us achieve our goals and live those fulfilling lives.
Right.
But if we let our emotions run the show,
Yeah.
it can really lead to stress and anxiety, even regret.
Absolutely.
So take the time to understand your own relationship with money.
Mm-hmm.
Develop those healthy financial habits
Right.
and seek out the knowledge and resources
Right.
that can help you make informed decisions.
I love that. Well, we've covered so much ground today. But this is really just the beginning of the journey,
It
right?
is.
Into this fascinating world of mental
There's
psychology.
always more to explore.
There it is. There's always more to learn.
And remember, financial literacy is a lifelong pursuit.
It is.
The more you learn,
Yeah.
the more confident and empowered you'll become in managing your money and reaching your goals.
Thanks for joining us on this deep dive.
Yeah, thanks for being here.
We hope you found it insightful and empowering.
Absolutely.
Until next time, happy investing, everyone.
Happy investing.